Scotty, I can tell you very simply, the very top item on our list, on our proprietary due diligence checklist we have, is the actual full backed up accounting file and the tax returns for the entity that you're looking at potentially purchasing, whether it's an asset sale, whether it's a potential stock sale. Most times these transactions, if you're looking at purchasing an entity, you're provided financial statements on paper, which in some cases don't tie in with the tax returns. Sometimes I've actually seen the financial statements been doctored up to not be the actual ones versus what is actually in the accounting files. But the accounting files gives us, in doing the due diligence, which we do a lot of due diligence when we're looking at potentially helping clients, especially on the purchase side, to really analyze the last 3 to 5 years of history of all transactions on the balance sheet as well as the P&L. In typically it's the QuickBooks file that we were able to then build a financial model to determine essentially an appropriate valuation on an informal basis of that pharmacy in a multiplicity of ways. So it tells us whether there are issues with third-party receivables, which oftentimes they are. Sometimes the receivables are not even recorded. A lot of times inventory changes once a year, not monthly. A lot of times debt is inappropriately shown. Leases sometimes are incorrectly coded, whether it's an operating lease or a capital lease. Sometimes that's an issue. Many times the fixed assets are, sometimes the asset list is 40, 50 years of items that have zero value when you're looking at purchasing those items. But without question, getting the accounting file, doing the due diligence with that, building that model, tying that model into the actual tax returns that have been filed is the single most important issue as far as doing that due diligence.